YouTube video is rolling. What's up, YouTube? So we're just gonna do the same thing today. We're gonna mark out our levels and we're gonna determine what price is likely to do. So a little recap of yesterday. I did have this low marked out. I just took it out. We had this low, so we were trading in the range between this low and this high. Price rejected off of this high, came down, broke through. New York Open, had a little retest. This would have been a perfect opportunity to get into some shorts right here. Bam, right all the way down. Then we had lower highs. Bam, came down, tested some liquidity from this move up right here. And then we did a reverse and we couldn't quite target that New York Open again. It looked like we were coming up to target it, but we didn't quite get there. And then we are now in a downtrend again. So we're now in a bearish trend. So let's mark out some levels of importance. The first thing we're going to do, we're going to go on the 1 hour, mark out our highs and lows. So this is going to be a low. This is going to be a low. And then now we're going to mark out our highs. So this is a high. This is a high. We're going to make them black so we can identify that they are indeed highs. And if you notice, my candles, my selling candles are also black. So that's a nice little psychological trick I recommend for anybody that's viewing this, is to make your levels the same color as the corresponding candle. So for example, if you have a bullish level right here, or if you have a buying level or a demand zone or a low, make that blue along with the candle. So you see blue and you identify, okay, this was a buying move. There was a lot of buying volume around this move, right? And the same thing with the selling candles. So my selling candles are black, so I can say, okay, this is a high. There was a lot of selling pressure. This is a high. It's black. This is a high, right? This is a New York Open, which turned into a supply zone because price came up and grabbed liquidity right there and then moved down. So I'd highly recommend doing that for anybody that's watching this video or anybody that's watching the live stream. So now we're going to go ahead and mark out the New York Open as so, just like we did yesterday. So first 15-minute candle, 8 a.m. I haven't really made any moves right now, so we'll just keep this. We'll keep this black and blue to show that it's neutral. And then once we either have a move to the upside or the downside, we will then change it to black or blue based on what the move is. Right. So what are we looking at today? So today we had a pretty slow Asia session in regards to volume, but we did have a little bit of volume. So we had a mainly bearish session for Asia, right? So we started up here, we moved down here. We're about 8 points from where we were up here at the top. And then we also had a bearish session, or we're still having, because it's still open, a bearish session with London session, right? So we started up here, we kind of grabbed this liquidity from this open right here, and then we moved all the way down. Moved all the way down. So right now, I am really just looking to see if we break out of this, come and target this high, or if we actually come down, target this low, and even break through this low, and then target this level. That would confirm the downtrend, that second scenario. So basically, if you are looking for shorts, what I'm looking for, or what you should be looking for, obviously this is your own opinion, conduct your own research, this is not financial advice, but this is just what I'm looking at, is to see if price is able to break below this low and come and target this low to show that we are in a bearish trend. All right, so I'm just going to check the chat real quick, make sure everything's good. Restart Discord. Why I can't hear? So yeah, just restart the Discord. It was they fixed it, but they're all good. Cool. Yeah, if you ever have any technical issues, just restart Discord and you should be good. Right, so really we're just waiting for some volume to come in now. And I do want to see, because one thing, if we get some more buyers come in and we start making more of a bullish move, I could potentially be looking for a break and retest to the upside, right? So something like this. That would be a very nice setup if I got to see that. Right, so a breakout or break and retest based off New York liquidity is one of my favorite setups to take. If you've been in here for a while, you definitely know that to be true. If you're new, you've probably still even seen me take some setups of that nature, right? Because even right here, let's go over the setup. So we do reject off this high, so that is also in alignment with our strategy. So we have this high right here. We rejected off the high perfectly. We literally hit it to the cent 3 times or twice. We hit it once to the cent, second to the cent again. This is the exact high we had marked out in the live stream. You can go watch the live stream from yesterday on the 3rd, and you can see that we had this all marked out. And you can see that we did have a pretty violent candle right here. So I would not have wanted to get into anything right here. I would have waited that out. But then right here, right? So I did end up getting into some shorts like right at the end of my trading session right here, just based off this break and retest, because look how textbook it is. So we break through, we're below. So you're saying to yourself right here, you're saying, okay, if price comes up and retests this, I'm going to take some sell positions right here with my stops above this zone. So I literally would have had my stops like right there, or I had my stops right there. And I was targeting about 10 points on this trade. I probably ended up with like 12 points. Didn't get that whole move at all, but I got what I wanted, and I was able to get in and out of the markets following my plan. So that's where the win is. I actually targeted this low, so yeah, I got 11 points. Yeah, so a nice little pretty much 1 to 3 risk to reward. Target some 10, 15 points. That's really all I do. Right, just these nice little scalps. Bread and butter, consistency, right? Small hits. Just join. What did I miss? You missed everything. I just revealed the super secret strategy that I'm only going to say once. So you missed the most important 10 minutes of your life, brother. I'm just looking for volume. Right, so you'll see a lot of my trading strategy, a lot of me as a trader is just sitting here looking for some volume to come on in. Right, because trading without volume, it's not good, because what you're going to do if you're trading without volume is you're going to force trades that don't exist. So I know somebody's done this before, where you'll be trading on a day like, trying to find a really low volume day. Say even like this. I mean, this is just horse shit. Excuse my language, but this is terrible. So if you're looking at this volume right here, right? What happens is you try to take a short, you don't get enough points, so you get out of your short for like maybe a small win. You try to take another short, it goes against you. Then you try to take another short, right? You make 1 point. You try to take another short, you lose 2 points. And you just keep cutting yourself, right? Death of 1,000 cuts, or whatever the fuck it's called. Death of 1,000 cuts, because all you're doing is just taking these small repeated losses because you don't actually have a plan. So you're just acting purely based on emotional, and you're really emotional because you're not seeing any actual movement in the markets. Therefore, you're not making logical decisions because you're trying to chase trades. You're greedy. So that's a common mistake I see a lot of people make. Out for $500. Hell yeah. That's what we do. How do you know there's a lot of volume? So you check the volume up here on TradingView, and you click this, and you go to status line, and you click volume. And then volume will appear each time you hover over a specific candlestick. So that's how you find volume. All right, so let's see if we come up and target this level. Let's see. And so much this is your mindset. It's like, I was thinking the other day about like what percentage of trading is mindset versus what percentage is just purely technical and purely strategical. And what I came up with is that it's probably like an 80% mindset thing. It's probably about 80% mindset, if not more. The reason I say that is because so many people have the strategy, they have the technicals, but they don't execute. They don't execute because they're either risking too much money or their mind's just not in a place, it's not ready to take that step of becoming fearless. Because one thing about this skill, one thing about trading, when you master trading, you stop fearing failure. So not even when you master, but once you get better, your fear of failure just shrinks and shrinks and shrinks. Like this has actually been especially true for me because I'm a perfectionist, right? Like I'm really open about that. I like things to be perfect or as close to perfect as they possibly can be. So when I mess up something or when something doesn't go my way, I often get quite angry. Or in the past, I get even more angry because I'd say, okay, that didn't go my way, and that's not good. And my expectation was for it to be perfect, and the thing didn't go perfect because nothing in life is usually perfect, and that's what makes it beautiful because we have this varied distribution of outcomes that could happen at any given moment. But the reason I tell you this is because when you're trading, so many times you will fail. You will just take a loss and you'll be really mad. But the muscle you have to work on, the muscle you have to flex, the muscle you have to build as a trader and as a human being, even if you're not trading, is to stop fearing failure. Stop fearing failure. Fear not taking the actions that will lead you to success. Because on the actions, on that roadmap to success, there will be failure. There will be days that you feel like you're not doing enough. There will be days that you feel like you did too much. There will be days where you just don't do anything, right? So you can't judge your success. You can't judge your progress based on simple statistics like did I win or lose this trade. What you should base your projections and base all of your goals off of and base your assessment of yourself is did I get in the market and did I execute on my plan and did I follow my rules? So for example, how would this look? So for me, if I got in the market and if I got on the screen between 8:30 and 10:30 and I found a scalp setup, or even if I didn't find a scalp setup, but if I looked for a scalp setup that was targeting a high risk to reward ratio and my loss limit is $1,000, and if I found all of those things, or even didn't find those things, but if I followed my rules and if I followed my plan, that's a great day for me because I'm judging myself based on the inputs required to create money. I'm not judging myself based on the money itself because the money itself is a byproduct of you taking those actions. But often as traders, we get so confused because we think we can just come on here and make money instantly. And yes, you technically can, but what's making you money is not you trying to make money. What's making you money is you finding A plus setups. So if you master and you get a lot better at you finding A plus setups and you following your rules, the money part will come and it will come a lot faster than you think because when you're focused purely on the exact actions that get you that money, you start to get in a different league because so many people are out here just trying to make money without any actual evidence or without any actual substance behind the actions that they're performing. So please keep that in mind. That's very, very important. And you cannot be attached to the outcome. If you win the trade, you win the trade. If you lose the trade, you lose the trade. You have to be attached to the input, the process that led you to that. Right? If there's something wrong in your process, that's something you should fix. But if you followed all of your rules and you know that your strategy works because you back tested it and you just miss a trade or you just lose a trade, that's not something to be concerned about. If anything, that's something to be happy about because you were sitting there and you executed on the criteria that you told yourself you were going to execute on. So that's my not even understanding, but that's my perspective on how to stop fearing failure is you don't worry about the outcome of the trade. You worry about the process that took place during that trade. And this can happen on a demo account. This can happen anywhere because all you have to do is you have to find a great place to enter and exit the trade. So just focus on that. Focus on finding great entries in your specific time frame of when you trade, of when you're participating in the market. Anyone know how to change the text color of the volume to black? So basically what you have to do is you have to change your candle colors because it's going off my corresponding candle color. So you see, so I'm looking at a blue candle right now, hence it's blue. I'm looking at a black candle, it's gonna be black. And if you want to change that, you do have to change your candle colors, specifically the body of your candle. So this part, this large part is the body. Yeah, there isn't much you can change without changing the candle colors, and unless there's some way to change the volume without changing the candle colors. But yeah, we're still just watching price right here. We're seeing if it's going to break above New York Open or if it's going to come reject and target this level. So it's just a game of watching right now. What's GameStop doing? Damn. The movement on some of these fucking assets. I mean, this is just absurd. To target that gap, though. Imagine getting puts right here, even right there. But yeah, this is just absurd. I mean, it could even bounce right here. If we stay above this gap, we could gap up till this gap. But damn, it's an interesting time. Isn't he like getting banned? Did somebody hear about that? Or is that just me? He's getting banned. Roaring Kitty, the guy. Roaring Kitty's the guy who started this whole GameStop stuff. Isn't he getting banned from the broker for like market manipulation or something? Anyone hear about that? He's getting banned from E-Trade. I don't know if that's the right move. I mean, come on, like these giant brokers, they manipulate the market all the time. They just get away with it. What do you think Robinhood's doing when they're freezing your shares on GameStop, freezing your buy and sell button? But then the brokers come on here and they're like, "Yeah, we're gonna ban Roaring Kitty." Like, come on, I don't think that's right. Do I always wait for a pullback to enter trades? If I'm entering longs, usually yes. Except sometimes I'll trade purely based off of a bounce. So I'll just see a position or I'll see a level getting hit and I'll trade purely based off that bounce. But I'm usually waiting for a pullback. The bank being down $517 billion dollars in unrealized losses. The FDIC is stepping in. That's not good. Yeah, that's not good for the US financial system at all. We're gonna have some fun stuff happen, or not fun stuff. Somebody's gonna be like, "Oh, it's not fun." We're gonna have some exciting stuff. Fuck it, I'll say exciting. Happen this year in the markets because of the election. So we're gonna have a lot of movement. Some of it's gonna be good, some of it's not gonna be good because there's just so much like weird stuff going on right now, and all these narratives and all these different things occurring across the world. Like I'm telling you, some of the stuff's gonna get weird with like UFOs and satellites. Like I'm not saying that like UFOs are here. You can argue if you want. You think they're real, you think they're not, but the news cycle is talking about UFOs. So whenever the news cycle starts talking about something, it becomes a narrative. So next thing you know, we're gonna have like UFOs, and we're gonna have like satellite warfare and all this stuff, and it's just gonna cause complete chaos. And chaos means volatility in the market, and volatility means opportunity. But it's weird. It's really weird. Like you'll be watching the news these days, and you're just like, "What the fuck is going on?" But that does lead to a lot of volatility and uncertainty. Cyber war could be imminent. Yeah, there's a very high. Oh, the thing about cyber wars is they're always going on. They're going on right now. It's just like a matter of like which level of infrastructure it touches. Because like right now, say there's a cyber war going on between two countries, like it's likely just targeting some smaller company that we none of us have heard of. But what we don't want to happen is there's like an actual cyber war where countries start targeting their critical infrastructure. That could very well be much worse than an actual war. Just because think about how everything is connected. Planes, cars, Wi-Fi, spaceships, military equipment. We all use the internet, satellites. But the reason I say this is just because you need to prepare for things to be quite crazy, right? So just understand that things can get a little cuckoo. Just think about think about how crazy this is, y'all. During 2020 and 2021, we had pictures of monkeys and of pixel drawings on the internet selling for millions of dollars, and in some cases, tens of millions of dollars. When you look at that, you have to ask yourself something. You have to say, is this normal behavior from humans? No, it's not, right? So you can say that humans have no longer the rational market theory, the theory that everybody's a rational actor is no longer in play, right? People are being irrational, right? I love NFTs, but buying an NFT for $3.5 million is not like a normal human. behavior thing. So when you see this, you start saying, okay, human behavior is getting a little crazy. When you identify that human behavior is getting a little crazy, you can identify that the markets are going to get a little crazy because, I talked to a billionaire one time, and I talk to billionaires pretty frequently, relatively frequently, and many of them are just hedge fund guys. They manage a ton of money. They do what I do, but they're trading with tens of billions of dollars, right? And it's other people's money. So all their whole job is just to make returns in the market. That's all they do. And if they make 20% on their portfolio, they pay back their investors, and then they pay themselves a huge chunk. And he told me, he's like, the market is just a sum, it's just a reflection of human behavior. So he's like, study human behavior. Stop trying to study all these complex market things. Study human behavior over time. Study mass psychology. Study how humans act on a group level, right? On a national level, narrative, sentiment. And that's sauce. That's sauce, right? That's like me giving you some real information that you should absolutely write down. You should absolutely take into effect because if he's a billionaire and if he makes hundreds of millions of dollars, right, alone just from trading, from him investing, he knows something that most people don't. Because if you want to make money investing, you have to be contrarian. You have to think about something that nobody else does. Because if everybody is thinking of an investment, it's not a good investment because everybody is going to make the same investment and that will be reflected in the price. It'll already be priced in. So the people who make the best investments have a little bit different of a way of thinking. They'll look at Apple and they say, you know what? Samsung's doing this new tech and Apple's buying their iPhones from a certain town, and this certain town is about to have a civil unrest or a civil something, right? But they just make these connections and they see things that other people don't see. So by being the odd one out, by being the one that everyone's calling crazy, you're usually, in terms of investing, you're usually doing something right. That could also apply when starting a business. If you're starting a business and you have a completely new idea and everyone's like, that's not a great idea, it's probably a pretty good idea because most people are usually wrong. Like, I'll just say this right now. Everyone is usually wrong. Usually wrong. Like, people have just had such a bad. Do you guys remember, like, 6 months ago, everybody's like, recession, recession, recession. And then we just hit all time highs in the stock market, like, a few weeks ago. So people have no idea what the fuck's going on most of the time. So just don't listen to these like mass narratives of like everybody saying, "Oh, we're in a recession. Oh, this is gonna happen. This is gonna happen." Just watch the money, watch human behavior, understand human behavior, look at how human behavior has changed throughout the elections, throughout different periods of the market. Study how humans acted before big crashes, how humans acted before big moves up. Right. So that's very very important stuff, everybody. Somebody sent a picture of the Bored Ape. Yeah, it's crazy. It's crazy, crazy, crazy stuff. Yes, I mean as far as price action. I'm just looking, I just want to see more volume, but I could be looking to target this level, or price could be looking to target this level right now if we keep closing above this level. So if we close above this zone right here, we could look to see price move up here, or, which honestly would be a better scenario in my opinion, is we break below this, break and retest, target this level, or we just come shooting right below this level and target this next low right here at 5,246. Sapiens is a great book. Okay, I'm gonna read Sapiens, man, and I'm gonna get back to you because I bought the damn book and I didn't read it, and that's exactly why I bought it. Is because it talks exactly about this human psychology over time. So I'm gonna read that. Really, it's fascinating stuff. Great, Big Short. Big Short's a great watch. End of the World is just the beginning. That's by Peter Zilhan, I believe. He talks about how the world is changing globally. This stuff's so important to know, like how what's going on with the world. Listen to geopolitical strategists. Don't listen to news people. Listen to hedge funds, guys who own hedge funds. Listen to Larry Fink. Listen to Ray Dalio. Listen to Steven Schwartzman. Listen to Jamie Dimon. Listen to people who are actually moving money. Our politicians don't really know what's going on. I hate to say it. If you haven't found that out by now, our politicians are not gonna help you with anything. And he said, can you make a course on who you should listen to, who you should pay attention to? Yes, I actually just did a whole course because I was doing a whole separate course for the academy, and I have a bunch of lessons. I actually have a lesson in the academy called How to Trade Like a Billionaire, but I will condense the lesson. I'll find some important information. I'll make sure I send out a document of where people should be listening to because that's very important. The biggest don't, it's a lot of don'ts too. It's a lot of don'ts. Do not listen to CNN and Fox. Their business stuff, like their finance stuff is fine, but don't listen to like the general narratives and take it for heart. If you're gonna look at the narratives, look at like so here's what I do when I turn on CNN. So I turned on CNN the other day and I wasn't even watching it. I was with somebody, I was with a friend, and they had it on in the morning and I wake up and I'm like looking at it and I'm like, what the fuck? Because it was aliens. It was some like alien hearing. You know what I'm talking about? Like, has anybody seen this? Some alien hearing thing. So I'm like, okay, now I guess the narrative is aliens. The narrative is like space and all this stuff. So I just take that into mind. So I like write down all the narratives because the narrative is going to be like election, obviously. It's going to be space. It's going to be metaverse. It's going to be AI is a big part of the narrative. So keep track of these big public ideas that people are thinking of because these public ideas, when one of them gets bigger, when AI gets big, when crypto, and sometimes these narratives mix. So you get an AI narrative, you get a crypto narrative, they mix and they start giving you some great opportunities. All right. Don't listen to what they say, watch what they do. Yes, definitely. Why did I mark out the zone? So this is a New York Open zone. So I definitely recommend watching the premium courses on here if you haven't already. So I marked out a New York Open, just the open of the New York session. So we are watching right now to see what we do because we're either gonna this could be a little break and retest kind of thing occurring really on the 5 minute, and then we come up and test this level, or we're just gonna completely reject this right here, come down, and then test this low, and eventually probably test this low. Yes, there is news. There's news at 10 a.m. It's like Jolt's job openings. So 10 a.m. news. So be mindful of that. They try to strike fear of people and control human behavior. Yes, exactly. Yeah, absolutely. And that's why I say don't watch the news because when you watch the news, you can't like get in the habit of watching the news. Like I'm not trying to say like don't ever watch the news, but I'm trying to say don't look at the news and consider that to be what's actually going on because they get paid. Here's how the news makes money. The news makes money for how many people watch it. It's that simple. So if the news makes some bullshit story about something that doesn't even isn't even true, it doesn't even make any sense, but they know it's going to strike fear, the news makes money. That's all the news cares about is how many people watch it. So that's why they have all these like dramatic things. Like I was on CNN the other day, and they had like a whole infographic going for like it was like the trial of Trump or something like that. It was one of these narratives, and they had like a whole like infographic with like animations and everything. And I'm like, what is this? It feels like I'm watching Star Wars or something because they make it all exciting and they make it all dramatic so that people watch it. This volume is ass. Yeah, no, this volume is shit. No volume right now. I mean, literally like zero volume on that's on the 5 minute. This is not what you want to be looking at. NCLH. Was that the cruise line, right? Oh, big gap. Yeah, yeah, big gap. Huge, huge gap. Yeah, I was talking to Money Motive about this stock last night, actually. We're talking about this gap right here. So that's definitely a gap fill play that could be presenting itself to us very soon if it hasn't already. I'll be looking for with gaps, y'all. If you're asking how I did this, so look at this, right? So where did price close? And then where did it open on to where did it close on Monday right here? Where did it open on Tuesday? So where did price close? Where did it open? That's all you're looking for with gaps. Do you ever trade on the 1 minute time frame? I'll monitor trades on the 1 minute time frame. Rarely will I enter purely based off the 1 minute, but I will like go down to the 1 minute month already and trade to monitor how it's going on a smaller time frame. How do you trade an Asian session? Similar to how you trade New York, my friend. Similar to how you trade New York, but there's a lot lower volume. So I would probably be in trades for a little bit longer just because you're not going to get as many of those scalp opportunities. So to answer your question, the same way you trade New York session, but I think you're more of a scalper. So I would just expand your average time in a trade by, 15, 30 minutes and just try to catch those bigger moves because you're not going to get as many of those high volume ups and downs just because there's less volume. How do gaps form? No, that's it. That's literally it. Like a gap is purely so when did price close to when it opened up the next day, right? And there's often a lot of liquidity either below these zones or right above these zones. So we often target a gap up, meaning target the top of the gap, or target the gap down, target the bottom of the gap, or a gap fill, which just simply means come up and target the gap. So we are getting a little bit of volume right here. So this could have indeed been a break and retest setup on the 5 minute. So we broke, retested, so we'll see if we come up and test this level. So that's where I'm looking at right now, is to see if we come up and test this level. Cool, so I'm going to call the YouTube video right now just because YouTube, my screen gets a little slow after 30 minutes, so peace out YouTube.